So how do you translate kind of the way you think about the market and about all these things we're talking about into advising clients? That's a whole nother thing. Like you can have your view, but then your relationship with clients, like managing, a lot of times what you would want to do might not match up with their goals, right? Or their personalities or whatever.
Yeah, so I'm of the belief that my client base, they're going to live way longer than they think, and they're going to live way longer than the actuarial tables tell you, because we work primarily with high net worth. And so it's one thing to know that the average life expectancy in the United States for men is 74 and for women is 78 or whatever it is. Amongst the top 10% of wealthy households, it's definitely not that. It's way longer. So people that think they're going to retire at 65 and be dead at 75, it's really not going to go that way. The reality is they could have decades of life long after they're earning income, which means they're going to need a lot more money later in life than they think they will, which necessitates risk-taking today. You can't not have risk. The only decision that you can make is when do you want it. So we prefer to have people take their risk now while they're still earning money and while they're able to. And that means equity-heavy portfolios and the emotional necessity of living through drawdowns and accepting that that's part of the deal. You can't have the upside if you're not willing to endure the temporary downside. And the reason that becomes so important is you may have a portfolio, you may have a lifespan that requires a portfolio to grow for a way longer period of time than prior generations. So our investing philosophy is to just be very aware of that as we build financial plans and then build portfolios that will satisfy those parameters.